Today, an Australian drug stock jumped 36% in a single day. Meanwhile, some of the safest, most boring companies on the market fell on an up day. And both of those moves were, in a way, not what they look like. It's Monday, June 29th, the second last day of Australia's financial year. And today's lesson is, right now, half the moves on the market aren't real. Let's break it down. First, the 36% rocket. That one was real. Neuren makes a drug for Rett syndrome, and after an earlier rejection, Europe's medicines regulator reversed course and recommended approving it. Here's the thing about biotech stocks. They're binary bets. One regulator's decision can double your money or vaporize it. Approval? To the moon. Rejection? Crater. There's rarely an in-between. Today, Neuren won the coin flip, and the stock leapt to about $16.60. Now the boring stock. Today, pipeline giant APA, a rock-solid utility, fell about 5%. On a day the whole market rose, up 0.7% to 8,823. A safe stock dropping on a good day. Here's the catch. Most of that fall wasn't selling at all. Today was APA's ex-dividend day. It paid out a 30.5-cent distribution, and on the day a dividend leaves the company, the share price mechanically drops by roughly that amount. On an $8 stock, that's most of the move right there. The rest. A little profit taking after APA gained around 25% this year. Nothing wrong with the company, it's the calendar. And the calendar brings games. The first is called, no joke, window dressing. Near the end of a reporting period, some fund managers buy up the year's winners and quietly dump the embarrassing losers, purely so the portfolio they show clients is a clean list of champions. It changes nothing about the businesses, it's a costume worn for the statement. The second move is sneakier, tax-loss selling. The trick, if you made money on a winner, you owe tax on that profit. But if you also sell a loser, you bank a loss, and that loss cancels out some of the gain, so you pay less tax. Totally legal. So every June, investors dump their worst stocks on purpose, and some names fall for no real reason. Pure accounting. The payoff comes in July. Once the selling stops, those beaten up stocks often bounce. It's so reliable traders bet on it. The new financial year rebound. So here's the rule worth keeping. If a great company drops on a great day in late June, don't panic. It's probably not the company, it's the calendar. A dividend leaving the price, a fund tidying its books, a tax loss being banked. Underneath the tax theatre, the real story hasn't changed. America's inflation is still hot. Its core gauge running at 4.1%, the most in about 3 years. So the US central bank stays aggressive, the US dollar keeps surging, and the Aussie dollar just hit one of its weakest points all year, around 69 US cents. Even the Middle East behaved. The US and Iran agreed to stop shooting and talk in Qatar, so oil stayed calm near $72. One strategist called it an awkward ceasefire dance, and as long as nobody trips, stocks just drift higher. So today, one stock won a regulator's coin flip, the safe stocks got sold and marked down for bookkeeping, and the whole market is doing its end-of-year accounting in public. That's your end of day. Remember, in late June, half the moves aren't real. Subscribe. The new financial year starts Wednesday, and so does the rebound trade.